Hey, what's up? I'm Cody the Coin Raptor, and I'm here to bring you the latest Bitcoin news plus my reaction to it. I first want to start off by saying happy birthday to Bitcoin. This is Bitcoin's 14th birthday since the mining of the original block, aka the Genesis block, 14 years ago. Now, according to CoinDesk, the Bitcoin rewards from that very first block can never be recovered because they were sent to an unstable address, and that would be worth almost $825,000 at today's prices. Now, the next bit of Bitcoin news I want to talk about is a little bit less celebratory, and I want to talk about the hacking of one of the OG Bitcoin core developers. His name is Luke Dashier. He had his hot wallet compromised lately, and in this hot wallet, it looks like he had about 200 Bitcoin or so. A cyber criminal hacked his what they call the pretty good privacy key encryption and was able to steal all the Bitcoin in his hot wallet. Now, this is why I think it's always a good idea to store all your Bitcoin and crypto on a cold wallet. He put out this whole tweet thread about exactly what had happened, and he had pointed out that it went to this address here, and he's trying to figure out how he can get help and if the FBI could help him here. And he's saying basically it's all gone here. So people are asking him, well, what does this pretty good privacy have to do with it? And he's basically going through and saying, well, this has something to do with the Bitcoin knots or the core. And basically they were compromised. And this has caused the hacker to go in and drain all of the Bitcoin out of his account. And they're basically saying that the knots specifically were compromised and not necessarily the core here. But CZ at Binance actually replied back to him and said that he'd be able to freeze those Bitcoin funds if they came into the Binance exchange in the future. So that's something that's positive. Hopefully he does wind up getting his money back. But again, this is a really good argument for having a cold wallet. Now, the difference between having a cold wallet and a hot wallet, the hot wallet's going to be exposed to the internet. It's going to be online, and a cold wallet is going to be offline and not exposed to the internet whatsoever. So even if it was compromised, the thieves would not be able to withdraw the Bitcoin or the crypto from the cold wallet. All right. So next, I want to go ahead and talk about something that's also very interesting. And Barron's put out another article about Bitcoin and saying that basically buying it right now is a perfect play according to a Wall Street powerhouse. Now, what they're saying here is they're basically going through and talking about what this analyst at Bernstein said about Bitcoin. Now, they're saying that buying into crypto stress has had a perfect track record. Bitcoin in its 13-year history has experienced 2 winters prior to the 2022 winter and has always come back with exponential returns from the bottom. And I tend to agree. If you take a look at Bitcoin's long-term price action, you can see that it is in a strong long-term uptrend. Now, these analysts also said this is not simply about discounted prices, but is also about the long-term future of the industry. The industry has a great track record of fighting back from the lows and taking punches when it is down. And again, it's very obvious when you take a look at the crypto, when you look at Bitcoin specifically, the long-term price action here. And so it sounds like they're very bullish buying it right now, and they're very interested in seeing what the growth story for Bitcoin and crypto looks like. And they're saying crypto is probably among the few industries that can clock frontier tech-like growth in a maturing tech landscape, noting that crypto touches less than 5% of total internet users with a significant headroom for application-led adoption. And that's always been my keyword here is adoption. When you see many different applications and you see the infrastructure that's being put into place and leading to this adoption, now all of a sudden you have adoption, and adoption means demand, and demand will fuel higher prices. Okay, when you see companies like Fidelity offering Bitcoin 401ks, or you see eventually we'll get a spot Bitcoin ETF, that is adoption. That will drive demand, and it will drive prices higher. And so that's basically what they're talking about here. They're also saying that there is a bear case, however, and they're saying that there is some headwinds going to 2023, including threats from regulations, gloomy macro backdrop, and unfavorable to risk assets, and waning demand from institutional and retail investors. Now, I think all these are cyclical demands, personally. And you take a look at the headwinds, most of that we're talking about here, I think regulation is really not going to be as much of an issue as other people do. The macro backdrop will eventually improve, and then also this demand will come back as soon as the macro backdrop improves significantly. And it's also worth noting that I think regulation isn't necessarily an existential threat. The chances of banning Bitcoin straight out, I think, are very low. However, you can also get some sensible regulation that could prove to increase the demand from institutional and retail investors, because at that point, it's regulated and people are a lot more sure of the assets, and you don't have these massive crypto companies that are going bankrupt, and then people are having to take huge haircuts and sometimes not even being able to get their assets back at all. So I think that's actually pretty important to point out as well. The next thing I want to talk about is the ongoing feud between Cameron Winklevoss, the co-founder of the crypto exchange Gemini, and Barry Silbert, the CEO of Digital Currency Group, or DCG. So Mr. Winklevoss alleges that DCG owes Gemini customers $900 million. He also alleges that Mr. Silbert borrowed $1.67 billion from Genesis for share buybacks, venture investments, and grayscale trades. Mr. Silbert came back and said that DCG did not borrow from Genesis, and he has delivered a proposal on how to move forward. This is potentially the next big shoe to drop. If DCG is insolvent or having liquidity problems, it could lead to another panic and force DCG to sell significant Bitcoin and Ethereum assets. Now, I will say that so far this is speculative, but I will continue to monitor the situation and the story as it develops. This could be a potentially big event and a potentially big insolvency, if true. Okay, that's all I've got for you guys today. As always, I would appreciate a like and a subscribe if you enjoyed this content and would like to see more. Do you guys keep your Bitcoin and crypto in a cold wallet or not? And what do you think about the Genesis drama here? Leave a comment below, and I'll catch you in the next video.